Vaibhav Ganeriwala joins us now, Group CFO with Vaibhav Global. Vineet, good morning. Thank you for joining us. So Vineet, first, on behalf of everyone from ET Now, wish you a wonderful 2021 and season's greetings.
Good morning, Nikunj, and good morning to your viewers as well, and thank you for having me here.
Okay, now we understand that for Vaibhav Global, the Christmas time is always a big time. That's where Western consumers, they go out, they shop, they go out and splurge. Given that this time around, we've had a lockdown in UK and a big spike, at least in US in this because of corona cases. How has the Christmas season been for you?
So this year, pretty much the Christmas, the Black Friday, Thanksgiving, etc., have been good for the industry as a whole there. So initial data shows that year on year, the retail sales have increased by about 3 to 5%. For an electronic segment, it has grown much faster, maybe close to about 20 odd percentage is what the initial industry data shows. So we are an e-retailer and we fall into that bracket. So so far the Christmas and the festive season have gone very well for us. We continue to see the same strong momentum we have seen in other quarters of this year.
Okay, so two follow-up questions. When you say strong, how is Christmas 2020 different from Christmas 2019? And B, when you say you see the same momentum, were you expecting this quarter the momentum should have picked up because of the Christmas season? So I'm asking you two questions. First, year on year, and then quarter on quarter. What has changed?
So when I meant momentum, or when I said momentum, I actually meant the year on year growth trends. So this quarter, which is the festive season, definitely the overall sales for the retail industry picks up a lot. And we being in that segment, we are an e-retailer. We do almost 30% of our annual business in this quarter. So pretty much in terms of the year-on-year growth trends, which we were seeing in the earlier quarters, we continue to see the same momentum this year. Talking about what difference this year had in store. So this year was quite different in terms of like we had the US election on the back of us. And earlier we used to see that whenever there was an election period, there used to be some eyeballs shifted from the TV home shopping or web shopping, which we actually play upon. And there used to be shifting of eyeballs to the election media coverage. So a lot of election noise used to have a bit of softening in this festive season period. But this year, in spite of the elections, we continue to see the same kind of elevated momentum, which we are seeing in the earlier quarters.
Sure. Vineet, with rising freight costs, the global cargo logjam deepening, which we've seen, especially because of what's happening there in the UK, what's the kind of impact that you're witnessing? And also with the UK going under lockdown again, how's that impacting sales or the supply side of things?
We have an integrated supply chain. So we are directly manufacturer to customer. So which gives us a lot of agility to respond quickly to the changing situation. So with this logjam at the UK ports, etc., we were in a position to all ramp up our procurement in local UK market as such and other places and take care of the supplies. So we didn't face any supply crunch. In fact, we managed to run our operations smoothly in the peak COVID period as well, wherein there were large-scale supply disruptions felt in different parts of the country. But we managed to continue operations then. We managed to continue our operations smoothly even in this logistic disruption kind of a scenario. And coming to your second point of pandemic and lockdowns, so now we have seen various phases of lockdown, like economy going under lockdown, economic opening from lockdowns in UK and US over the last 8-9 months of this year. And pretty much our momentum continued in all these phases. Of course, when it is a more severe lockdown, it only helps us because the physical retailers are shut and hence people move to all kind of electronic retail shopping, which only helps us in this kind of a scenario.
Um, quickly walk you through what we've been up to in trade right now, and just mapping what the market is up to before I get back to our expert and chat a little bit more about where the business is shaping up. 13,855, so it's definitely turning out to be a very strong start to the last trading week. So far, you've got good momentum coming in from real estate. That's holding up very well, with Godrej Properties already a big breakout candidate, that pushing further, and DLF as well is holding out very, very smartly. So that stock as well is contributing a fair bit and playing catch up to some of the other realty majors, which already began their move last week. Case in point, like I just said, being Godrej Properties already. But just looking at the rest of the texture of the market, and I just want to bring up Nifty Bank as well, because that too has had a decent move as we speak. So that is also looking good, and some of the bank constituents are really aiding the movement on the Nifty and holding out quite smartly. But we've got Vineet back with us. Vineet, apologies for that little bit of a delay. Just wanted to understand, Vineet, because there are some concerns regarding the increasing market share and expanding customer base from here on. And some of the investors believe that it's going to be a challenge to build on both these parameters. How is it that you would like to address this?
So we are deep discount retailer. So our value positioning is such that it works good in all kind of economic cycles. So our average price is compared to other peers in the same categories is half of them. We have a vertically integrated supply chain, which enables us to first offer compelling value to the customer. And at the same time, it also enables us to command a gross margin of 60% or more, which we want, which is a desired number for us. So we don't see any challenge in this segment at all. Even in the peak pandemic period, so we saw a huge actually boost to our customer numbers, to our sales, to our repeat, to our order per customer, and so on and so forth. Also, what we are seeing is that the consumer behavior, the acceleration towards the digital journey have further accelerated in this pandemic period. And we strongly believe that some of these changes will be permanent in nature. So what we are seeing is increasing eyeballs towards TV, increasing web traffic, increasing marketplace sales, and increasing social commerce. So these are the areas where we operate upon. So all in all, we see more opportunities for us rather than any challenges or threats going forward.
Fair point. Tell me, how exactly has the company stayed slowdown proof all this while? Because, that as well is something that all the investors, are wondering. What's managed to help you sustain the margins despite having a model which is based on heavy discounting? And what then is your sales and margins outlook for the second half going forward?
So like I said, so we are a vertically integrated supply chain model, so which gives us a huge cost advantage. So though we operate at half of average selling prices than that of our customers, which means we have to do a lot of hard work in continuously innovating and developing new products, selling that under our in-house brands. But that gives us a huge cost advantage. So we are able to maintain both our value positioning, but also our desired gross margins of 60% or more. Over the last many years, we have been able to maintain those kind of gross margins across various categories we operate upon. Besides, our business model is also such that below our gross margins, most of the cost, approximately 60% of the cost, are fixed or stable in nature, which means with rising revenues, operating leverage we continue to see in our business. So we have seen that across many years, and we are confident of seeing operating leverage going forward as well. In terms of the outlook for margins, revenues, So what we did in the last quarter investor call was we increased our H2 guidance to 18 to 20% of retail revenue growth in constant currency. So we are pretty confident of maintaining this elevated level of growth in the short term. What we see in the medium and long term is increasing confidence, and hence we are giving a guidance. We gave a guidance of 15 to 17% retail revenue growth in constant currency terms, even for the medium and the long term. We do not give any guidance for margins as such, but like I was mentioning, our business model is such that we continue to see operating leverage, and we are pretty confident that we will continue to see that going forward as well.
Okay, in terms of platforms, particularly when it comes to markets like the UK, US, I mean, are you looking at online having seen a lot more traction, going forward as well? How is this going to impact strategy as consumption patterns change in some of your key markets?
Yes, so we operate in video commerce, which is home TV, web commerce. So we have our own websites in both the geographies. We also operate in digital space, which is the marketplace of Amazon, eBay, and the like, and also in social commerce. So we sell through various kind of social platforms, Facebook, Instagram, etc. What we are definitely seeing is an increasing shift towards web. While TV continues to grow, the web is growing at a much faster rate, and that's a trend we see across last many years. As a company, we have been investing into this space very consciously. So we are spending into both. One is infrastructure. The IT is infrastructure. So a lot of investment is going into the digital platforms, increasing their capabilities. But at the same time, we are also investing in improving the overall customer experience while this digital shopping is taking place. And like I was mentioning, so what we are seeing is an now acceleration of this digital shift. So much higher web traffic growth than earlier what we were seeing. In fact, both in US and UK geographies, the e-com sales to total sales for the industry as such have also shot up in this last 8-9 months sharply than at the rate at what it was. Benefit out of this opportunity which came our way, and we see a sharp growth in our web revenues as well. In the last 5 years, wherein the CAGR of our web revenue growth was about 30%, we are seeing approximately 40-45% growth in the last 2 quarters.